Hi guys, and welcome to the price action analysis video of the 21st of February 2022. And let's start with a little bit of a different style today. I want to show you and teach you how to analyze price exactly. Okay, so let's start by actually playing back the candlesticks the way they were formed. So I'll just go into the replay mode, okay, and I'll just start with the opening candle of the day. So let's see. Okay, now the first candle is formed, and just check out the previous day. What is your sentiment here when you see a previous day like this, which has been a pretty sideways day with an average kind of a CPR, and later when we see that there is a narrow kind of a CPR here the following day, which happens to be a descending CPR to the previous day, and the price opens outside the previous day low. So what is your sentiment here when you see this kind of a bearish candle, the first candle that you see? You obviously think that it is going to be a trending day to the downside, right? The combination is perfect, isn't it? The narrow CPR and a descending CPR to the previous day, and the previous day low broken by the very first candle, and a strong bearish candle, bleeding red candle, the first one. But when I see such candles, I am always a little bit skeptical. You know why? Because I feel that in my experience of trading, I have most often seen that when something like this happens and such a big candle forms, I usually wait for price to give me some sort of a signal in the follow-up candles. So in such places, what I normally do is, see here, now we had previously marked this area. You can see this blue box here. Okay, this was the box we had already marked, and price opened below that box. It first went up into the box and then took selling exactly inside the supply zone and came down. Now here, looking at the previous day, that was actually the demand zone. Why? Because price had shot from here to here in one session. Okay, and that happened to be the demand zone, but price opened outside that zone, and I've always told you, when it is a demand zone initially and price opens below it, it becomes a resistance. Okay, and that is what exactly we saw today, and this kind of a bearish candle was formed. What do you think is the sentiment here? It is absolutely bearish, and a lot of sellers will jump into that candle when they see that kind of a strong selling candle. Okay, let's go ahead now and check what happened later. Another strong candle here. Okay, now what do we see here? Now we get to see this candle, which was also very strong, and this candle also, which has strong wick on the top, which also suggests that there is strong selling here. Was it a good idea to short in the very first candle? Shorting here, was it a good idea? Where would you keep your SL? Your SL would be on the high of this candle, isn't it? You cannot keep your SL somewhere in the middle, isn't it? You cannot keep it here, you cannot keep it here. So you have to have your SL. Even if your SL is here, then it is that big an SL. So it is never recommended that you keep that big an SL. And if you don't keep that SL there, then the safest place to keep your SL is up top here. Maybe you could place it a little bit lower here, maybe, but that still is a very big SL. Okay, and then if the SL is that big, then your profit level goes even further, and the chances of that SL being unprotected are much higher. And here in this candle, which is the 935 candle, the first signs of some bullishness come in. Why? Because you see that candle, take a look at this candle carefully, compare this particular candle with these previous few candles. Okay, you can see this candle is not very strong, and again, as per our levels, whatever levels that we had marked here, you can see some price action, and again here you see that price went and took support exactly at that level. That level was the 17070 level. Okay, let's go ahead now and analyze what happened later. You can see now, you can see these two candlesticks here. Okay, these candlesticks are extremely strong candles, and once this first candlestick is formed, it is evident that price is going to reverse from there. It is taking strong support from this region, that is the 17,070 level. Okay, now price starts to follow a pattern here. Okay, strong green candles here, and finally price comes and reaches the previous day low. The previous day low support, or rather the resistance, was here. Resistance because price opened outside that range. Okay, and it goes there and it starts forming some red candles. But if you see closely, these candles are not really bearish candles. Okay, you can see after I magnified that there are wicks on both candles on the bottom also. So these are more dojis and not bearish candles. You don't see any reversal sign there. Okay, moving ahead, what happens here? And that is the breakout. Okay, a strong candle, check this out, that is a breakout candle, and that candle, that was the 11:30 a.m. candle, broke the high of this particular first red candle. You can see that. Okay, so that high was broken. Now here, was it a good idea to go long? Again, this is a good Marubozu candle, a strong Marubozu candle, that is the 11:30 a.m. candle, but in my opinion this still is not a good idea to go long here. The reason being the CPR on the top, the immediate top, because even though this is a narrow CPR, but you cannot take chances with the CPR. I never take chances with my CPR in my trading because I know that CPR can act as a strong support and resistance no matter how narrow it is. Yes, it is a game of probabilities, and you can think that a narrow CPR, you can probably assume that a narrow CPR will not act as a very strong resistance, but in my opinion that is not a good thing to do. Let's go to the January 7th and I'll show you why I'm saying that. Check this out there. Okay, this day the price fell from the high to the CPR 177 points, and you can see this here. Check this price action out. You can see a bullish pin bar here. Okay, this is the 12:45 p.m. candle and a bullish pin bar. It shows signs of absolute reversal from here, and that is what exactly happened. Now see this CPR, how narrow is it? This CPR is barely worth 16 points and today's CPR was more than 30 points. So this CPR technically was narrower than the CPR that we had today. Still you can see the kind of support that CPR provided in this particular area when price came falling towards it, and you could see how price bounced from it. So I never take chances with the CPR. CPR in my opinion is the strongest support resistance you can find on any given day. It doesn't have to be a wide form of CPR at all. Okay, now here see price approached CPR with this candle. Here it started making some bearish patterns. Okay, you can see that this one is a kind of a bearish pin bar, but this was the price was still below the CPR, and you know by now that I take trades based on the CPR wherein I see some breakout from the CPR. But today, it being a narrow CPR, when price broke out of the CPR, you could see here that the candle here had made an high and the high was broken by this particular candle. You can see the 12 p.m. candle tried to break out of CPR, but the breakout was not successful. You can see this, and then the 1205 candle was the one that actually broke out. So let me just mark that candle out for you so it can be clearer. See, I'm talking about this particular candle, and you can see that it broke out of CPR. You can see the wick on the 12:30 p.m. candle. So the 12:30 p.m. candle had a wick on the top, and that wick was broken by the 12:05 p.m. candle. But this candle was not a strong Marubozu candle, and that did not suggest a very strong breakout from the CPR Also, when CPR is this narrow, it is advisable that you avoid a breakout trade from CPR, especially when price has bounced from here up to the CPR. Okay, so what strength do you think has been left in any sort of trend when the price has already bounced so much? What was the bounce like? Let me check here. See, you can, if we want to see in digits, then let's see. It had already bounced 230 points by the time it broke out from CPR. Do you imagine that if you take a trade there, let's check out the risk to reward ratio. So if you were to go long on the 12:05 p.m. candle, you would keep your SL below the CPR here, so around a 25 to 30 point SL, and then your profit booking would be say around the R1 pivot here. So you can see that that is a 1:2 kind of a risk reward. This is the R1 pivot here, the blue line you can see here. Okay, and you can see this area here. This is the R1 pivot, they've labeled it. Okay, and let's see if price actually went and reached the R1 pivot or it did not, and breakout failed. So you can see if you had kept your SL there at this area, your SL was taken out by this candle here, the red candle. So that is why I always say that as far as trading on the breakout of that CPR goes, it is not a very strong resistance and it does not really imply a long or a short trade whenever price approaches to it. And especially if you look at the price action, when price has already gone 230 points, then there is not much left in price to go any further. So use logic also. If you are seeing price bouncing 230 points already on that day, no matter what level is broken, please do not go long on those levels. Going long somewhere around this area here is a different story. Okay, but then you also saw that the risk reward even here, if you had traded on this particular candle, was not good because your profit booking would have been at the CPR. Best to take profits at the CPR. So one good trade today would have been if you would have waited for a 50% retracement of price to the green candle, the breakout candle here, and then you would have gone long here, and then you would have kept your target at the central pivot range. But there it was not to be, and you can see here that price never really came to the 50% line. Okay, so let's see what happened later. Okay, price kept fighting at the CPR from there, going sideways for a long time, again shot up, and then price broke down from here, broke the CPR again with a big red candle, and there it formed a green candle. Okay, now let's see what this is. Okay, I had not marked one level here yesterday because it was formed today. That was the high of this particular pin bar. I'll show you the time of this pin bar. It was 11:15 a.m. So the 11:15 a.m. candle here was not marked yesterday, and I had marked this level today. So let me show you the level here. I'll just zoom in a little bit. This level was marked today because it wasn't present yesterday, obviously, because this day has begun today. Okay, so this is the level I'm talking about. Okay, and why is this level marked? See, previously the day opened with this strong red candle. So where is the supply zone? The supply zone is the high of that candle, which happens to be this. Okay, that is the supply zone. Now if you're like a trader like me who trades purely on price action and supply, demand and support resistance, then marking support resistance is very important for you. So here you can see that the 11:15 a.m. candle, that was the red pin bar. So this particular candle was the one that took resistance at the high of the day and was showing some reversal sign, but it was again above the previous day low, and the previous day low you can see acted as support once it was broken as a resistance. So here it acted as a resistance, here it acted as a resistance, and then it was broken as a resistance, and then here it acted as a support. So going short here on this candle also was not a good idea because this area has would now act as a support. Once here it has acted as a resistance, second time here it has acted as a resistance, and now it will act as a support. So obviously that was what it did. And then this particular candle, the green Marubozu candle, that was the 11:30 AM candle, was the breakout candle. It took the high of this particular wick. So that is why I have marked that level today, and that level, the high of that candle being 7238.85. You can see this level today. I have marked this level today and during the market hours, and then you can see here that price came here, and one, as I said previously, one chance of taking a trade here is when this line, the breakout line, is retested, and you can see that line was retested. But let us go ahead and see if any sort of reversal candlestick was formed there. Now this is obviously not a reversal kind of candlestick. You can see this has wick on the top, so this shows that there are sellers on the top. Now let's go ahead, and now you can see, you do not see any sort of reversal kind of a candlestick between the three of these candlesticks here. None is a strong reversal candlestick. So the retest entry also failed, and then Nifty fell from there with these three red candles, and then it kept trading within that zone, and then some strong red candles, and it closed, as you saw, at the level of 17205.75. So that is how you should be analyzing the price action for the day. Now you can see here that the open and the close, okay, the open here was 17209 and the close of this candle is 17205. So the open and the close are almost nearly the same. Okay, so in spite of this powerful trend in price today, the open and the close are nearly at the same level. So a lot of volatility in price in Nifty today. So that is how you are going to analyze price action in the live market, and then this is how you should take trading decisions based on price action. Now let's go ahead and check for levels that we will be marking for tomorrow. This is the level that we had marked here, the box where exactly where Nifty initially took some resistance and fell sharply, then it gave some price action within that zone, and again within that zone it has shown a lot of price action. So we can now delete this level here. We can also delete this particular level here. We can delete all these levels as of now. We don't need them, and this level also here can be deleted. We will keep the level of 17070.20 intact, so let that level be, and we will obviously be marking the DH as an important supply zone for tomorrow, right, because price has fallen from there after a big rally. So that is an important level, and the 17070 level continues to be a demand zone. We had marked that level coming from historical price action, so you will have to be watchful when price comes to that area. That area was marked because we could see that on the 14th of Feb, here you could see that price had fallen sharply from there. So now you could see that when price approached it from the top, it acted as a strong support. Yes, so these are the important levels. I don't see any more levels here. I will definitely be posting these levels on Twitter, so I'll just mark out all these levels and post them. So please take up the final levels from there and mark your levels on the charts. Let's go to Bank Nifty and see. So as we just saw, and I just explained a while ago in Nifty analysis, that Bank Nifty opened with this red candle, but it opened within the previous day range. Alright, so the previous day's range is here as we had marked. You can see that this selling had a lot of strength. You can see the size of all these candles, strong selling candles, isn't it? Bleeding red candles, all these. And then price took support exactly at the area that we had marked previously, that was the 37179 support, and it took support there, and in spite of sharp selling, it reversed from there. So that demand zone was also marked. That is why I keep telling you, please go to Twitter and pick up all those levels that I'm marking here for you. They are highly important levels. See how price respects the levels that we have marked. It respects those levels not because I have marked them, but it respects those levels because those are the levels that market itself has given us. It is just about the analysis. I'm only picking up those levels and showing them to you. Okay, so please ensure that you pick up those levels from Twitter and mark them on your charts. And from here you can see how price action was today. See how volatile this was. It went down here, then jumped, came back here again. Within this area, the box that we had marked, it showed some price action and it spent some time there, and then from there it bounced again. Okay, here again you could see that the CPR was very narrow here, a very narrow CPR. Okay, and this was the S1 pivot here. So let me just mark the S1 pivot. Now I have a strategy in which I have said that whenever price opens within the S1 pivot and the CPR, you should see whether price reverses from there. So you could see here that this was the candlestick. The very second candlestick showed some sort of bullishness at exactly at the S1 pivot, and for a while it looked like it was taking some support at the PDL, but it was not to be like that, and it broke down from that level and took support at the next level that we had marked. Okay, so had price taken support here at this level and reversed from the S1, then I have said in the strategy that if you see bullishness then you can go long, and then you can keep your target at the CPR, because the CPR is going to act as a magnet. So whenever price reverses from the S1 pivot, a lot of times it is seen that price goes and reaches the CPR. So if you had seen this kind of a bullish pin bar here, then it was a good idea. If it were a green candle, then it was a good idea to go long on that candle. But price broke down from that level. So as you can see here, a lot of sellers were sitting in this candle. Okay, what will you do when you see such a candle? You will obviously go ahead and short it, but these sellers, you will have their SLs on the top here. Okay, so everybody went short on these candles. They kept shorting all these candles, and this major rise was a short covering rally. Okay, what happens here is the bounce here came because everybody who sold in all these red candles panicked and looking to cover their shorts, and that short covering as well as a bounce from the 37179 level here with this kind of a candlestick pattern where you see a very strong green candle here enables new traders to jump in at this particular level. Obviously that is a demand zone that is marked, so somebody like me who plays on supply demand will be looking to go long on that candle. Not that I went long on that candle, because those are not the exact locations on which I trade, but I'm just explaining it to you. And then everybody who went short on those first initial few 5 candles was in a hurry to cover their shorts, and panic set in, and this is nothing but a panic reaction in Bank Nifty today. So that is why that major jump and bounce from the bottom. So let's see what was the bounce like from the bottom. Bank Nifty shot nearly 900 points from the bottom. So the bounce is because of panic setting into the short sellers, and they were running for cover, and hence price shot up from the bottom. And you could see that price broke out of the previous day high range with this strong Marubozu candle. But then that was yes, it was a breakout candle, but then we had all these levels marked here. So had Bank Nifty reached this level also, that was the R2 pivot. So you can see the R2 pivot here. Had Bank Nifty reached that level also, that still would not have been a good risk reward trade. Okay, so that was not the good trade to take. You can see here that this was a very big candle. It was what, 125, 128, 30 points almost, and you have barely about 180 points here. So that obviously is not a 1:2 risk reward, and you should not be trading for such risk rewards. Okay, so that is how you should analyze price action while the market is live, and you should not jump into trades unnecessarily. There is no reason to have any FOMO just because you see a big trending day and you feel that it is a narrow CPR, yet you are not able to trade on that day. There is no reason to feel any such emotion in the live market. There is no place for emotions in the live market. Okay, so just be calm it's okay. You have to see price action, you have to see what sort of price action price is showing, and only then you should go and punch your orders. So don't be in a hurry to punch orders and don't suffer from fatal emotions. Okay, now based on this kind of a price action, let's just go ahead and check levels out. So you can just delete these levels here now. Let this level be, it is an important level from which it has bounced today, although multiple retests of the same level renders the level weaker and weaker. Okay, so just mark that area out, because price has bounced nearly 900 points from that area, so you have to mark it. But that level next time might not hold. We will just see what price action shows us whenever price comes to that area. Okay, I have marked the high of this candle out because this candle high has been marked. That is the reason being that this candle high has not been retested today. So whenever price comes, maybe if tomorrow price comes here and it tends to retest this level again, if price opens here and retests this level, there is a chance that it will bounce again from this level, because that level has not been retested after that level was broken today. Okay, and all these levels have to go. They are no more important now. These supply zones are no more important. Just extend this old supply zone and mark another new level here. You can mark a zone like this. Just extend these levels here. Okay, so this box can be extended downward. Why? Because price has shown you that it has jumped 900 points from here, and then it has taken selling here, and again it has retested that level and fallen. I would mark this level out also, the level kind of being around 37,631.60, but I have always said to you that if the level is within the CPR, then don't bother marking it. Unnecessarily adding levels to the charts will confuse you, so don't do that. Let the level be. The CPR is already present at that level. I think that should be all for today's price action analysis and important levels. I hope you're finding these videos useful. If you have liked this video, please hit the like button and also subscribe to my channel and hit the bell icon so you're notified each time I post a new video. And please do watch these videos daily, because I keep explaining price action on daily basis and what sort of entries you could have taken and where you should be avoiding those entries. Thank you so much for watching, and I'll see you in the next video.